Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Thursday market webcast. All right, daily chart, and you can see, with the liftoff from Tuesday from CPI, we printed early on yesterday off of PPI. We printed the upper band. It faded off of that, and we really spent the rest of the day just grinding the entire day. I struggled yesterday. Look, the tape comes looking for everybody at some point. It came looking for me yesterday, and it was not a pleasant experience for me trading this tape yesterday. It was really tight. It wanted you to guess on the edges. It didn't really, respect a lot of the stuff that we use, and it was just a big mess. But look, that's trading. It's going to happen. You are not going to bat 1,000. You are not going to, you are not going to achieve, eternal enlightenment. That's not what trading is. Trading is about limiting the risk that you take, limiting the heat that you take on trades that don't work, and maximizing the trades that do. That's how you end up trading for as long a period of time as most people aspire to trade. So, and you got to understand, those days are going to happen. You get back on the horse and you just, you do it again. So what are we looking at today? Part of the problem yesterday and part of the problem heading into today, depending on how it's going to go, is we're right back in another consolidation. So the Bollinger Bands in the hourly chart are around 0.4, which is right around where they were yesterday. But this was, this was very tight yesterday. This was that PPI breakout. So you had a little bit of a false breakout here, a little bit of a false breakdown here, and things just kind of wound back in. If you're the bulls, you need to keep the pressure on here. You need to keep the pressure on. You need to get above 41.25 today. You need to make a higher high. You need to try to engage with that daily upper band, which is right now up at 45.63. So it's going to take a 63 to 66 print to get that done. And this is where, if you're the side that won the expansion, as short-lived as it was, as we went right into another consolidation, you don't really get much time off. You need to press. You need to get up and through. Otherwise, you're going to come back and, at a minimum, retest the top end of this consolidation range, which I drew it a little high here. It's more like where we launched from CPI. So what is that, 44? Where's the low end there? 20. That's a little excessive. I mean, that's 100 handles from here. But at the same time, if they can't press, if they can't get it done, then, there's a point where, a big tree falls hard. But in looking at things, I think it's very difficult to look at this and not say, okay, well, there's a bid under here somewhere. The lows are getting defended, the dips are getting bought. You've got some things that probably need to get tested that would only make the market stronger, whether that's the top end of this range, whether that's the reaction zone from CPI, whatever that is. I would expect that to get bought, and I would expect the highs to get taken out as we get through the end of this week into the end of the month. And then, they can decide what they want to do with December. If they want to chase performance into the end of the year, then they're certainly within the range and within the news flow that would allow them to do so. Unless you get some big piece of news that's going to hammer this thing down, you're getting the kind of forward-thinking news right now that emboldens longs, which is why we're up here. That's why we've done 400 handles in a few weeks. Is it sustainable? I have no idea. I'm sure everybody on Twitter has an opinion. What I know about prices, we're consolidating again. If bulls win this one too, it's going to lift up, and we're going to be dealing with, then you're dealing with 45.75 to 4600 if they win this range, especially if we can consolidate for another day. Because you're going to take that spring, you're going to push it between your hands like they did back here with that larger triangle, but there's only so long you can do that. And when the spring pops out, then you get a big move, like 100 handles in a day, which is what we got on Tuesday. So you've got volume weighted average price and our proprietary moving average sitting at 45.15. You got the hourly mid-band sitting at 16.5. Daily pivots at 22. You've got, it's basically flat overnight. You're up 2 handles versus yesterday's close. We're printing 45.21 right now. It's a couple minutes shy of 9 o'clock Eastern time when I'm doing this. We're making a new Globex high right now at 21.5, 21.75. Your Globex low is right down at 45.07. The Bears had multiple opportunities yesterday to go and test 4,500, but they couldn't quite get it done. That is still open for business today. Whether they can achieve it remains to be seen. Like I said before, as far as the bulls go, you got to take out 41.25. You have to keep taking out highs. You have to keep trying to reach and keep that upper band ride going as long as you can. If not, then you're going to make some lower highs. You're going to see the shorts come in a bit, and then the question is there a bid there? Is there a higher low to a higher high that's going to get made, or are we going to come in? Whatever it does is whatever we'll trade. I would not anticipate much. I would make price prove to you what it wants to be and what it doesn't want to be. It's a lot easier way to go. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.